Good morning, everybody, and happy Friday. Of course, my name is Gareth Soloway here at verifiedinvesting.com, and I'm here to dive into the technicals of the chart. We'll talk a little bit about what's going on in the world of news, but really for us, it's all about the charts. Probability-based trading ultimately is the best versus emotional trading. All right, so this morning, we're hearing a couple things. Yesterday, we had the UK trade deal, which did help the markets rally, although it was interesting that after the fact, it kind of emerged that this trade deal was not all inclusive with the UK. It was just for specific things. And so, really, in essence, it was a low hanging piece of fruit. And I think the markets, that's why we saw the markets fade from their highs yesterday and only have a slight uptick on the day, basically about 0.7% versus we were up close to 2% at one point during the day. Now, this weekend, you're going to have the U.S. and China trade talks. Now, this morning, Trump has floated bringing tariffs down to about 80%. But I have to say, 80% for the market isn't going to make a whole lot of difference. I don't foresee a lot of trade occurring with even 80% tariffs on goods coming from China. So we'll have to see, again, how that plays out. Let's get into the charts this morning, folks. Let's flip over and take a look at the S&P. The markets right now are fractionally higher. You can see yesterday we had that amazing surge in the S&P futures, right? This is when Trump began his press conference from the Oval Office. The big move up is all this kind of hurrah and, this is great type of deals. More deals are coming. Like all of the rhetoric that kind of gets investors excited was going on. And we surged dramatically up. Look at this rally. And then as things kind of quieted down there and the deep dive went into the trade deal, the markets fell back down. And again, it was still a positive day, so it was still good. But if we look at today, right, so we closed yesterday right here on the S&P. And then you could see overnight we were down a little bit, up a little bit, sideways chop. And then this morning on this 80% cut to tariffs on China that's potentially on the table for this weekend. The markets kind of gyrated, kind of came down, and are floating back up. But again, from the close yesterday to the opening today in less than 30 minutes, we are net positive. Now let's flip over to the daily chart. The daily chart, again, it continues to hammer on this key level. This is a major gap fill. This is kind of the beginning from Liberation Day where we had the big collapse in the stock market down. We have now fully recovered from that collapse and are chopping in the underbelly of this trend line. All right, now this is the key, guys. As of now, this is starting to put in a little bit of a bullish pattern. Okay, so again, this is a slightly bullish pattern. And if we break and have a daily close above this, you could see the markets really push up significantly. Next stop on the S&P or the futures here would be around 58.35. So again, that's on the futures. It's a little different on the S&P itself, but in that general vicinity, you would kind of pinpoint the 5,800 level probably on the S&P 500. All right, so let's watch really closely here and see what happens on this Friday. And what we're seeing, folks, is that every time something is announced, right? So yesterday it was the trade deal with the UK. You're then having the next carrot dangled in front of the market, right? So, all right, so the UK deal is over. The market's got to pop on that, albeit a small rally. Now the carrot is, okay, well, maybe we'll bring down tariffs to 80% on China and dangling potential talks outside of the market. So what's being going on here is you're kind of doing these one-overs. So after we get one news headline, the next one is potentially on the horizon. And that's keeping investors very interested and the market's able to hold their recent gains. Now, the question is it diminishing returns? Meaning, does eventually this type of thing wear out its welcome? We'll have to find out because I think a lot of it's going to be in the meat and potatoes. Do we get actually substantial trade deals versus just a lot of talk and a lot of fluff? Eventually, that will wear out its welcome. All right. So back to the charts we go. The NASDAQ 100 remains the same. Yesterday, notice how it attacked this pivot point here, but was pushed back down, still a net positive on the day. But again, as of now, we're seeing the markets on the QQQ. If we go to pre-market, we are trading slightly higher from yesterday's close. So we closed the QQQ at 488.22. We're trading currently at 490.89. So that's about a $2.50 rally in the QQQ in the pre-market. Now, one thing that's concerning here, folks, is this chart. Now, I've talked about this pretty much every day this week, but this again is a bull flag of consolidation. You can even kind of see an inverse head and shoulders here, right? So if you look at this, right, look at this, guys. Little bit of an inverse head and shoulders. I don't like inverse head and shoulders that are like not at the lows of charts, but either way, it is what it is, right? I mean, that's pretty crystal clear that it's an inverse head and shoulders, and you've now broken above this trend line. And what that means for us, folks, is that yields, granted, we haven't confirmed yet, but the odds are that we probably are headed higher in yields. Now, is that good or bad for the markets, right? Well, it's good if it's because the U.S. economy is going to do better. It's bad if it's because inflation expectations are going up and maybe other countries still don't want to buy as much U.S. debt, which is one of the reasons why yields can stay low or go lower. So we have to watch this closely. What is the culprit for higher yields? What we do know is that higher yields mean higher interest rates, higher 30-year mortgage rates, and ultimately it makes borrowing money more expensive, which is a negative for the economy, right? That's why when we go into recessions, they lower interest rates because it stimulates lending, which then stimulates the economy. So again, we have to watch this. This is probably number one on my list for things to watch into next week. All right, US dollar, you can see again, it's really not doing a whole lot in the last few days. You can see yesterday went up a little bit, came down. What type of pattern is this? This is a flag pull down inside bar action. It continues to form a bear flag. All right, turning our attention to some earnings announcements. Take a look at the trade desk here. This we did have in Smart Money stocks and ETFs with members. I did unload it yesterday after hours right around here, right around 67.50. And again, it's up a little bit from there. But again, a great gain if you were a member in Smart Money stocks and ETFs. Great job there, folks. All right, now where would a shortable level be today for a day trade? My level is right here at $72 Pierce. Why? Well, you can see this little flat area of a bottom where you had, this was the last earnings announcement where the stock gapped down, had another down day, another, and then it got this little bit of a micro bounce, and that will now be resistance on the chart. So if we get up to 72 and pierce it, there might be a quick day trade short. Now, what about a swing trade? I will not go near this as a swing trade short. I would maybe consider it at gap window. Gap window would be at 85, and that would just be a quick pullback, maybe a 5-10% pullback. We would have to go directly up into there into early next week. As of now, if anything, more of a day tradable stock because it's so beaten down still. Again, it's a great bounce, but again, we're not even into this level. It would have to get here before I would consider an opportunity on the short side. By the way, one other thing to do here, we can also do our Fibonacci retrace tool and see if any levels line up. And really in this situation, we don't see it. Here's your, again, you can see your 618 all the way up here. And then your 50% is even above gap window. And that even makes me more nervous about doing a swing short. Day trading is different. Day trading, you just jump in, you jump out within seconds, minutes, or an hour or so, versus swing trading, you're looking for a multi-day, multi-week move. And again, at this point, I'm leaving this off my swing trade list at any level. Now, turning our attention to Pinterest. Pinterest jumping on earnings. Here's your yesterday after-hours surge. It has faded a little bit into the open, but if we go to the daily chart here, there's a level that was already hit at 3140. That was a gap fill. So we closed here. We opened the next day down here. Same kind of deal that was in that big sell-off with the stock market in early April. Now, again, yes, gap fills are usually good resistance levels to day trade off of. However, the problem is we've already tagged it in the pre-market. If we look it up here, we were as high as almost 33. So we were even through that level, right? This one here is 3140. So I'm going to leave that level alone and look to my next level. My next level is going to be right up here around $34.70 to $35 Pierce, right up here. This would be an interesting level. Major pivot high. We went down, we rallied up, then we collapsed. So that should be a significant bit of resistance for a day trade. In terms of a swing trade short, is there anything here? Not really. I would consider if in the coming weeks it were to continue to rally into this level, see this down sloping trend line, maybe around $39 a share, there could be a short for a swing trade. Now, looking at a firm reported earnings. Remember, this is a buy now, pay later stock. Again, we did see the stock falling a little bit. Notice how it rallied up significantly into earnings and then is just giving back a little bit of that. There's nothing here for me. Day tradable levels for me would be 44 down here if it dumps to 44. And then to short it, my level would be probably this gap fill up here, 61.70 or so. But it really, again, it's not moving that much, so I'm not going to pay attention to it. Here's Expedia. Expedia reporting earnings yesterday after the bell, falling precipitously here. It is trading near the lower end, down about 9% on earnings. Notice again, same thing. It rallied up into earnings, falling. This one's at least a bigger sell-off here. So again, the question is, where's the tradable level for a day trade today? And for me, very clear here, I will be watching this 144.50 level. Pivot low, look at this. Pivot low, pivot low, pivot low. So the idea is if every time you hit that, you get a bounce, right? Well, then in theory, if we come down from this close even more, so it's more short-term oversold, quick bounce, not a swing trade, just a day trade level off of 144.50. Here's NET, which is Cloudflare, symbol NET. Stock is having a very solid move. The level I will be eyeing is going to be right up here at around 143.80. There's a gap fill right there. That would be a potential starter position. If we flip to the intraday, you could see again the initial pop got to about 139. So it would still from that high have to go about $4 higher or so, a little over $4 in fact, but very possible with this stock in the session today. So that level right there, 130, just under 144, I would say 144, just under that level. Now we all want to talk about Wolf, which is getting hammered here. JP Morgan downgraded the stock. Needless to say, they're still struggling. Now, again, what I've been doing with members of Smart Money, as well as what Drew does small caps, which is also, there's a small cap section of Smart Money stocks and ETFs. And basically what he's been doing is buying here and then selling, then rebuying and then selling. And that's what he did here, again, over and over again. It's been beautiful. Now the question is, does this fall down to that same trend line, and does it become a buy again? The answer is, if it were to fall all the way down here, this would be down around $1. Granted, it's trading quite a bit above that, around $3.22. But would I be interested in a lottery play down here? Yeah, I would. Now, the problem is continuing is that, remember, they got the CHIPS Act money taken away from them. So again, they were supposed to get, I think, $750 billion. And that has now been, the rug has been pulled on that. And essentially they just spent all this money on launching a new factory. And the problem is now without the money, they're basically running out of money. And so what JP Morgan and another bank said when they downgraded it to actually an underweight sell, which is not a good thing, they said, listen, this company may not survive. And I think that's why it's trading where it's trading, right? I mean, they still do about $1 billion in revenue or 700 million in revenue. So their revenue is good, but obviously they need money to keep the business going. They're still not profitable. And that's the issue there. So is there a chance that Wolf goes out of business? The answer is absolutely. At the right price, would I take a gamble on it? And the answer is yes, I would. But it's got to come down further for me to nibble on it again. All right. So again, we'll keep an eye on that. All right. We're going to turn our attention to crypto, guys. What a rally in crypto here. Let's jump back to the chart. Bitcoin finally breaking here to the upside. Let's go back to the daily. Look at this beautiful breakout above this upsloping channel. I was starting to question whether it could, and then finally it actually confirmed above this level, which is pretty remarkable. Look at this, guys. So here's your trend line, right? This is your parallel channel here. We can get rid of that line. So here was your bigger parallel. And you could see it kissed it, pulled back, pierced it, didn't confirm, rejected, and then closed above, confirmed, blast off. Amazing stuff. Now, I talked about basically where do I short this? I did start nibbling on a short late yesterday on Bitcoin. So I am slightly just a starter toe in the water on the short side here. Not to say that it can't go up here, but the thought process is very simple. Add kind of right around, let's say 106 area, and then at 113. 113 would be my max move. and that's at the high end of this trend line, which again, don't forget, guys, goes all the way back to the 2017 high. So this line has been a rejection line for Bitcoin now for basically 8 years. The bull market high of 2017, the first high here in 2021, the exact high in 2022, and then the 2024 and 2025 highs. And so the thought process is if it can get up there, that should be a level where it pulls back on. So we'll keep an eye on that. Ethereum, which had that long bull flag, finally breaking out here, guys. Take a look. Look at this, guys. Consolidation. It was getting long in the tooth. I was beginning to say, hey, listen, this is not good to see it so long in bullish consolidation. Why hasn't it broken out? Well, it finally did, and look at the move to the upside. Now, what's interesting here is look at this, guys. See this high right here? We basically kissed that high right in that vicinity. It's getting rejected off that, but that's an incredible move in Ethereum. And you can see this across the board, right? I mean, if you look at other names out there, we can quickly look at Cardano. Cardano, same thing, breaking up there. We have Avalanche. Avalanche has had a great move. You can see a move up the last couple days as well. I still think the altcoins could continue up a little bit more. Maybe at least, tagging here, maybe even tagging up here, as again, they have been left for dead for so long. I mean, if you look at this chart, right, Avalanche topped out in December at $55. Even just before this rally, it was trading at 19 and change. Think about how much the stock market has rallied, risk on has been. Finally, it's catching up with crypto. Now, listen, I did have Near Protocol and Ethereum. I did take profits on both of those. Near Protocol, look at this beautiful move on Near Protocol. Just amazing move up. Look at the bull flag right here. And again, getting very close. So I pulled this off the table this morning for about a 16% gain. So that was a nice one with smart money crypto. But again, at some point, these things will run out of gas. But the idea here is very simple, which is it's especially with altcoins, it's about when people get very excited about risk assets. So we've seen the stock market bounce basically 20% off the lows. Altcoins didn't really do much. They just, with that trade deal yesterday, the hope of China talks, it finally created essentially a short squeeze in the altcoins, and the altcoins have made a big move here. All right, so again, we'll keep an eye on that. I still have one long left in the crypto alt market that I'm holding in my smart money crypto. And then, as I said, I've started to nibble on Bitcoin on the short side here, just beginning to start a short position, and I'll keep you guys posted on that. Gold. Now, gold has had a couple down days in a row. Pretty big down days. It is getting a little bit of a bounce today. My guess is if I had to pinpoint how these charts play out, we're going to see something like this, and then we're going to see the next leg down on gold. I still think gold is going to go lower here, guys. This topping tail on the daily was the bearish reversal signal that I've been watching for. It occurred right at a parallel trend line. For those of you guys that are new, look at the beauty of this trend line. I mean, again, this is something I love showing because it's got so much power. Look at this and this low, and then you take the parallel. And again, I'll show you guys this, right? So literally all I did, I said, oh, look at those two lows. Now let's do a parallel line with trading view, and then dragged it up right to the 2011 high. And lo and behold, that's right where we topped out on gold. Amazing stuff. Just amazing to see how these charts work. But suffice it to say, I can see a little bit more of a bounce and then probably a rollover. The way a level or trade setup can be negated, if you ever have a daily close above that high of the topping tail candle power is essentially negated, and then it could go higher. And I still think mid to long term, we're going higher. It's just shorter term. I think there's a little too much bullish sentiment in gold, especially with risk assets having rallied as much as they have and the bullish sentiment taking over in the markets. To me, it's much more likely we see a pullback. Let's take a look at silver. Silver is basically just stuck in between these two lines right here. Nothing new to report there. Oil had a good bounce yesterday. It's up slightly today. Again, big drop, consolidation, drop, and then little double bottom, and we're pushing back up. Would I still be interested in shorting into this 65, 66 level if we get back there? The answer is yes. This was a support literally going back to 2023, even further. I mean, heck, look, you can see this go even further back. It even goes further back than this. But the point being is that, number one, we didn't officially hit it, so you didn't get a retrace to the scene of the crime. Number two, a trend line that was support for such a long time it's going to likely be resistance for a long time now. So again, that's what I would anticipate. And then lastly, natural gas. Natural gas is pushing above this line. I still am looking to potentially start a short position around $4 on nat gas if we get up there. Still got a little ways to go. We're at 385 and change. So we got about 15, 16 cents left to go. But if we get above 4 early next week, I would be interested in a short trade on nat gas. All right, guys. So as always, we're looking at charts. We're looking at the data. We're understanding the overall kind of geopolitical setting. And I always talk about that. But my decision making is much about the charts. It's the data and the probabilities. The data and reading the charts, we know that patterns tend to repeat because human nature doesn't change over thousands of years. And therefore, it's possible to get an edge on the chart setups and basically compete with the institutional money, right? I mean, they have way more money, way more algorithms than I do, way more, people at their disposal. But just simply looking at the charts and learning them and then learning probabilities and multi-factor setups can give me at least equal to, if not beating, the institutions in this game of investing. And that's what I want to bring to you guys. Again, try to level the playing field. We know it's tough against the bigger money, but it is possible to compete and even beat them. You guys have a great, great Friday. Thank you so much for supporting us and watching my game plan here. I'll be back next week, of course. Take care.